This is Toby G from the Toby G and JD Show. Today we're going to be talking about finance. We're going to talk about the Dow, where it is today, where it's probably going to be going, and we're going to talk about gold and silver. We're going to talk about a basket of stocks we'll be watching, and I follow the charts. And I'm going to give you a common sense approach to what's going on in the markets and why I believe it's going to go up. Now, I'm not an expert. I'm not licensed. I just tell you what I'm doing and what I'm thinking, and you can either follow me and go where I'm going. I've been doing this for a long time, and it works. You follow the charts, you follow the money. But like today, as I'm speaking, the Dow is at 23,134. Several podcasts ago, I talked about the Dow. I expect the Dow to go to 31,000, and the reason for that is Europe is imploding, the world is imploding, Asia and so forth and so on. And where do people put their money? They don't know where to put it, so they're putting it in the stock market. Money is starting to go out of bonds. Bonds are starting to implode. You shouldn't put money in bonds, that's for sure. So that money is going into U.S. equities from the people in the know. And then the companies are starting to buy back their own stock. They're borrowing it from the Fed at a low interest rate, and they're taking that and they're buying their own stock, so it increases their earnings because there's less stock out in the market. And the earnings go up. The CEOs and the CFOs and so forth, the executives, they be able to get their bonuses. And the paid pundits on CNBC and like Jim Cramer, I mean, these companies, pay him. And you've got Fox Business and so forth. People that go on there and the stocks that they tout, they're taking out to dinner, they're given perks to tout their stocks. So that's the reason the stock market is going up. Companies are starting to do better, the economy's starting to do better, but not enough in the last months for the stocks to be going up that much. I believe that it's the reasons that I just indicated. So I believe it'll go up to 31,000, barring any North Korean problems and other problems throughout the world. And it's not going to go straight up. There's going to be dips along the way. You're going to have a correction. If there's a correction, there's a stock that will follow that will be able to make money as the market goes down. But we'll go over that in a minute. The other thing I want to talk about, which I think is very important, everybody should own some gold and silver. You should own some gold and silver and be able to touch it. And don't buy it as an investment. You buy it as an insurance policy. Everybody should have some. You should go down to the local coin store once a month. If you can't afford to buy gold, you buy silver. You pay $3 or $4 over the spot price. So hypothetically, if the spot price is $18 an ounce, you may pay $21, $22 an ounce. But so what? If you need to, you buy 5 coins, you spend $100 a month, or you spend $1,000 a month. You spend that every month. You bring it home. You don't put it in a safe deposit box, because if you can't touch it, you don't own it, and you don't want anybody to know where it is. And if you can, pay cash for it and don't put it on a credit card, and don't write a check if you don't have to, preferably to pay cash. And bring it home. We'll talk in the future on what to do with that. And just remember, it's an insurance policy. Gold and silver are it's especially gold. I mean, it's been from Roman days. That's been money. I mean, paper money isn't backed by anything anymore in throughout the world. I mean, it's actually the countries, including the United States, is actually theoretically bankrupt. So you're better off owning gold and silver, again, as an insurance policy. The other thing I just want to touch very quickly on is the Bitcoin. I tried to buy the Bitcoin. It was $6,000 a coin. And yesterday, and it dropped dramatically today. Again, you can't touch it, you don't own it. I would do that very slowly. It could go to $10,000 a coin. It could go to zero. I don't know. Maybe I'm from the old school, but we'll talk about that. We may end up buying that in the near future as well. But I had trouble opening an account with a Bitcoin. It wouldn't take my information with a camera and so forth. And maybe that's a good thing. It gives me time to think about it more, research it more, and we'll talk about it on this show, which I'll be doing weekly. in the middle of every week, both on podcast as well as YouTube. Now, the last thing, I'm going to give you a list of stocks that we're going to be watching. It'll be changing from time to time, and I'm going to buy one today. And what I'm watching right now is iBuy. That's IBUY. That's the symbol. The other one is LIT. I'm watching STM. I'm watching MU. I'm watching PAYX. And I'm watching SORL. And I put on there SH. SH is not ready. It's not even setting up. SH is when the market goes down, or if the market crashes, like everybody's saying it's going to for the last year, and so many people have been listening to them and not making money as the market goes up. SH is as stocks go down, this goes up. So you can make money when stocks go down as well as going up without shorting a stock if you're not comfortable with that. But the one I'm buying today, which is set up perfectly, is iBuy, which is $37.17. Now I'm buying it because it's above the 200-day moving average and the 50-day moving average. The MACD is starting to pop up, and the stochastics, the slow stochastics, crossed over, which is a key indicator that money's starting to go into this stock again. It's been over the 250-day moving average for a long time. Excuse me. And I follow the candlesticks. And if you go there, you go to stockcharts.com. The charts are free. And if you put in candlestick charts, 50-day, 200-day moving average, the MACD, that's MACD, and you put in the slow stochastics, it'll give you what I'm looking at. Now, under the symbol, I put in iBuy, and it'll pop up on you. Now, I paid $37.17, and I put a stop 50 cents below that. The average day moving average on this is 40 cents. I gave it a little room. I put 50-cent stop below that, and as it goes up, I'll raise the stop accordingly. If it goes down or stays the same, I won't move the stop. If the stochastic starts rolling over and I think the stochastics are going to go down, I'll either take my profits or I'll take a small loss. But I follow the stochastics. To me, that's the main thing once you're over the 50 and 200-day moving average. I follow the stochastics. So we'll be following this. We'll talk about this stock and other stocks next week. I encourage you to subscribe to the YouTube video, and I appreciate everything. And this is Toby G from the JD Show. Have a great day.